Good afternoon, everyone. It's about 10 past 2 on Wednesday, the 22nd of September, a very important day. This is the Fed day, and you should get this in your inbox on Saturday morning, the 25th of September. I'm looking at the front page of VectorVest UK. As you can see, the primary wave of the short-term trend of the market has been down for the last couple of weeks. The underlying trend is still up, but it's hanging on by the skin of its teeth because the MTI is right on 1. If that goes below 1, the underlying trend will turn down. At the moment, we've still got a confirmed up in place. I've looked at the London markets up well today, so that let's see if that occurs or not. VectorVest does not advocate buying stocks at this time, so that goes for the stocks that I've talked about over the last couple of weeks in my blog, where I've recommended stocks, but the general market is not coming to the party. So we need to wait for the short-term trend to rejoin, hopefully, the underlying trend both being up. If we have a quick look at the VectorVest composite, you can see the market has in fact sold off quite aggressively. If I put on the MTI, you can see the MTI moving down at 1, and I think probably if the market should break this low of a couple of days ago, yesterday, we'll in fact get a confirmed down situation. So we need to be very careful here. We'll see what Mr. Powell says this afternoon. Markets are up in London because the Chinese bankruptcy seems to have de-escalated overnight. So that may be looking a little bit more positive than it was yesterday. In the essay, I've talked about how to analyze any stock in 30 seconds, and I'm going to try and do that now. This will be a bit of revision for many of you. Nevertheless, we can make it very complicated. I've got 3 stocks that I'm a shareholder in myself. I've been speaking about them on Monday afternoons for quite a long time, and we'll start off with Cape Tech. As you can see, that little A means it's on AIM. Trading at 420, we believe it's worth 626. So immediately we can see the share is significantly undervalued. And the value is a proprietary VectorVest calculation. It was up 10 pence yesterday, which is clearly not a proprietary number. That was 2.44%. You can get that for free out of the newspaper. Now, the next proprietary number is this number called relative value, which measures the share price appreciation potential in relation to a AAA rated corporate bond over a window of 3 years into the future. At 1.74, this is saying that Cape Tech should outperform a corporate bond by 74%. Anything above 1.3, VectorVest rate is excellent. So that's an excellent number. In my opinion, it drives the share price. The next number is relative safety, and relative safety measures the safety and the predictability of the financial performance on a scale between 0 and 3. Anything above 1.3 is excellent, and at 1.33, this is saying this is a company that's making money and all the financial ratios, etc., are getting better. So fundamentally, it's undervalued. It's got an excellent share price appreciation potential. It's got an excellent track record in making money. So the fundamentals look good. So we've done the fundamental analysis in seconds. RT measures the short-term trend of the market on a scale between 0 and 2. This is saying that this is strongly up at 1.53. And then what Dr. Delito did was that he put together RV, RS and RT into what he refers to as the master indicator VST. And as you can see, Cape Tech has got a VST of 1.53, which is excellent. As a default, all of the shares on VectorVest are rated by VST, but it's a spreadsheet and you could rate them by relative safety if you wish, just by clicking on relative safety. The stop loss is 363, and CI measures the long-term trend of the share, and at 1.7 this is saying the long-term trend is strongly up, and we believe it's going to grow earnings at 40% next year, which is really good. I think you would agree. So what I've done is that I've quantified the fundamental position, which is excellent. I've quantified the short-term trend of the share. I've quantified the long-term trend of the share in a few seconds without any chart watching. Now, I presented the chart of Cape Tech on many occasions. It looks very good to me. There was a deal a couple of weeks ago, and I'm a very happy shareholder. These numbers here are measures of the earnings yield, 5%, and a reasonably modest PE for a growth stock like this of 19, and the growth to PE is a very respectable too. So we've analysed that stock and it looks good to me. Now, the next stock which I'm also holding, been very good to me, is this Kainos Group. It's trading at £19, but VectorVest believes it's worth 7. It was up 71 pence yesterday, which was a whopping 3.7%. The RV is 1.28. Now, that's saying that it's going to outperform a AAA rated corporate bond by 28% over the next 3 years. And that's still a good to excellent number. Relative safety is 1.4, which is excellent. And the VST is a very respectable 1.38. The short-term trend is strongly up. The underlying long-term trend is strongly up as well. So this is the question that I get more than anything else. The share is trading at nearly 3 times the VectorVest valuation. How can the relative value be 1.28? Well, I explain it like this. If the share price stays at 1988 and the earnings come in as we anticipate at 29% a year, then at some time over the next 3 years, this is going to be markedly undervalued. So what's happened is that the share price has run away in the short term, but it would still seem to have plenty of upside over the next 3 years. The share price is not well ahead of the valuation for nothing, and that's largely because the city investors, in my humble opinion, are happy to price the stock in advance of those earnings getting to the annual reports. The danger, of course, is that if the stock and the management don't do what they say they're going to do, then the share can get a sudden and a quick haircut. So although everything looks good here, there's certainly more risk in trading in a share that's well above the VectorVest valuation. Now, many of you will know Susan Thornborough, and Susan would be an investor in Cape Tech, but she would not be an investor in the Kainos Group because it's trading a mile above its valuation, a more conservative approach. I'm happy to be in a share that's trading above its valuation as long as the relative value and the relative safety are high. So slightly more aggressive approach. So that's something you need to think about. Do you want to be in Susan's approach, which is slightly more conservative than mine? And just remember that if these guys don't do what they say they're going to do, this thing can certainly gap down on you, and all your stop loss doesn't matter because it'll gap right through the stop loss. And that's a decision that you need to make. In our worry-free trading plan, I teach a relative value of greater than 1.25 and a relative safety greater than 1.3. And the share should be on a buy or a hold recommendation. Those are the qualifications plus some volume filter. But it's up to you if you want to put another line in the Unisearch where price is less than value. That would exclude KNOS. I hope I haven't made too much of a meal about that, but that's something that you need to make a conscious decision about. And the last stock, which I'm also holding, which I think anybody that's listened on a Monday afternoon will know that I'm sweating in, Pan-African Resources. It's trading at 15 pence. We believe it's worth 24. The relative value is 1.21, which is quite good. But the relative safety is 0.85. Now, this is typical of a small mining company. And as I've said 1,000 times on a Monday afternoon, these stocks are not for everybody. And as you can see, it's put me through quite a sticky period. Again, Susan wouldn't be bothered with that because the relative safety is not nearly high enough for her. It's undervalued, the RV is not bad, but the relative safety, which means that it's a long way away from being a worry-free type stock. The RT is 0.76 on Pan-African Resources, saying the share is trending downwards, and the CI is 0.45, saying the long-term trend is well down. The fundamental position is mixed and the technical position is poor. A very aggressive trade, a very aggressive investment, certainly not for everybody. So I've done my best to try and analyze those stocks in a few minutes, to analyze both the fundamental position and the technical position. If you are conservative, if you're not getting the results from your trading that you would like, or your investing that you would like, and you want a quiet life, then make sure that you're in shares, favour shares that are trading below the VectorVest valuation. Favour shares with a relative value of greater than 1.25, favour shares with a relative safety of 1.33, and you want the short-term trend and the long-term trend to be above 1.3. So I hope that helps, folks, and I'll discuss this, answer questions about it next Monday afternoon at 1:30. Have a great weekend. Bye-bye.